Good afternoon and welcome to Midcap Radar. I'm Vivek Iyer and with me today is Reema Tendulkar. Well, Reema, it's a strong day, almost flirting with the lifetime high levels, and the broader markets too doing very well in the session.
And there's so much sector churn. So even at the index level, though we haven't covered too much ground, we are waiting with tantalizing breath whether we're going to cross and reclaim those all-time high levels. But as Vivek pointed out, flirting very close to those levels. But sectorally, you've got consumer staples which are on the back foot, but on the way up. You've got private sector banks like ICICI Bank flying high. L&T is a big mover. You've got insurance names too up and about. Let's take you through the top headlines on the show now. Benchmark Nifty index hovers near 25,000 within striking distance of its all-time high level of 25,078. Pharma, financial services are the big gainers, even as FMCG, energy drags. Mid-caps outperform.
Third-party insurance administration services provider Medi-Assist surges as it announces the acquisition of Paramount TPA for an enterprise value of 312 crore rupees. Brokerage Investec is also bullish on the stock.
Datamatics gains after the company announced a partnership with Microsoft to build its own Copilot solutions, focusing on process automation to accelerate business transformation.
ABB India surges in trade after Axis Capital double upgrades the stock to a buy rating from Reduce and raises the target price to 9,340 rupees a share versus 8,190 rupees earlier. The firm says they expect strong earnings growth in the second half of this year, adds that they prefer ABB India over Siemens.
And the rally continues for NIIT Limited, 15% up today, 45% in the last 3 days. Last week, the promoters and noted investor Ramesh Thamani picked up and hiked their stake in the company.
Well, it's been a very strong session as far as, the bulls are concerned. A lot of stocks are doing quite well, and like Reema pointed out, certain specific pockets of the market are doing extremely well. If you could pull up the entire insurance pack today, a very important news break that was done by our colleague S. Jain, was talking about that there could be some more tweaking as far as the surrender values are concerned. Rather, LIC has requested, for further tweaking and a further relook at the surrender values issue. And on the back of that, have a look at LIC, have a look at HDFC Life, ICICI Prudential. All of these stocks doing very well in the session. In fact, near the day's highest point, even Max Financial Services for that matter. Today we also have a lot of stocks doing very well in the session. Hormaz is standing at the wall. This is our special segment, Midcap Movers. Hormaz, take us away.
The broader markets are doing well today, even as the Nifty is nearing its record high. There is a lot of action within the small cap space as well. JSW Infra is one of them. Jefferies initiated coverage on the stock today, projecting an upside of close to around 20%. Castrol is another one, continuing to grow from strength to strength. Was up on Friday as well, up another 5% today. Century Textiles and Torrent Power are some other stocks that are having a good day in today's session. A couple of these Tata Group companies have been having some very strong moves over the last two sessions, and Tata Elxsi is one of them, was up 13% yesterday, another 13% today. Tata Investment is another one at the high point of the day as well, 17% higher. And Tata Technologies, another block deal took place in the stock today, opened lower but now is trading with gains of almost 4%. All three of them trading at the highest point of the day. Stocks that are doing well on the back of volumes, and Gujarat Ambuja Exports is leading the charts here, 8.7% higher there. CESC, another RPSG group company there in the news today. Lakshmi Organic is another one, and KFin Technologies on the back of some very strong volume, seeing gains of anywhere between 5 to 7 to even 9% in today's session. Some other stocks that are building on to their gains from yesterday, and NIIT, as Reema just mentioned, is one of them, another 11% in today's session after the upper circuit yesterday. GSPL was up almost 7% yesterday, adding on to that, and eClerx is up for the third straight day today with gains of another 5%. And lastly, some stocks on the back of that are bucking the trend in today's session. Actually, Granules is one of them. There's a news break that we just did a few minutes earlier, 2% lower there. Minda Corp and Chola Finance also not having a good day at the office today. Back to you guys.
Thank you. Interesting list as always. On Century Textiles, which Hormuz pointed out, 4.5% up. There's a Morgan Stanley note on real estate where they say that while they are constructive on real estate amid the upcycle, investor interest in real estate has waned a bit compared to what it was on luxury segment, the likes of DLF, etc. They're saying the valuations are stretched and investors are looking at smaller developers like Century Textiles and Shobha, and they may benefit from cheaper valuations and higher sales growth. So some reinforcement is coming for Century Textiles, which perhaps has pushed the stock
In
high.
fact, yesterday on our show, we had Knight Frank, and they had come out with a report, talking about the key premium luxury market projects which were being undertaken, as far as Delhi, Bangalore, as well as Mumbai were concerned. And they said that while demand, is up almost 17% in certain cases on a year-on-year basis, last couple of months it's moderated, and we're talking about premium luxury real estate, and I think Morgan Stanley is reiterating that.
Oh, absolutely. But let's move on and get you some source-based information, because sources tell CNBC-TV18 that a surprise US FDA inspection is currently underway at Granules India's Hyderabad facility since yesterday. Vivek, this is your story. What did you pick up?
Well, that's right. So, it's a very important development as far as Granules is concerned. At this point of time, you can't read too much into it, because we understand that the inspection is still underway. But why are we, discussing this particular development? Number one, to reiterate, surprise inspection is underway at Granules' key facility, which is the Hyderabad Gagillapur facility. What does the company manufacture here? The company actually has formulations as well as a PFI business manufacturing facility over here. And it's very important because almost 70% of the total business or total top line in Q1 came from this particular facility. PFI, in fact, is the pharmaceutical formulations intermediates. Not only that, it also assumes importance given the fact that in this particular facility, there are 11 ANDAs filed and which are pending for approval from the US FDA, and the company has a total of 16 pending ANDAs with the US FDA. 36 ANDAs are already approved from the facility. So in that context, it's a very important facility as far as Granules is concerned. We reached out to the management of Granules, to get a comment on this particular development. We are yet to receive a response from them.
Okay, let's move on now and talk about the market technicals. Will we or will we not? That's the big question, right? Whether we'll reclaim our all-time high levels. Shrikant Chauhan of Kotak Securities is now with us for a technical question. Shrikant, what's your view of the last 2 hours left for trade to close?
Yeah, good afternoon, Rima. Good afternoon, Vivek. I think, this market is going up gradually. No doubt that there is a lot of strain because number of sectors they are participating and they are supporting to the market. But at the same time, the overall pace is quite cautious, which is actually good for the market. Broadly, I'm of the view that the way the market is comfortably holding above the levels of 25,000, it is very clear that we are now heading for the next psychological level, which is around 25,500. In between, we could see the some selling pressure around 25,250. But broadly, I'm of the view that markets are heading higher. And even at these levels, instead of taking more bets on indices, it is better to be more and more stock specific.
Shrikant, which are top picks for the day? Any stocks that you're looking at?
Yeah, I think if we go through with mid-cap back, most of these stocks are crossing their important resistance levels. And now there is good amount of confidence that we are seeing in stocks like HDFC Life, on which you discussed just now. There also the stock has absorbed a lot of selling pressure. In fact, HDFC Life, ICICI Prudential, MFSL, all are showing equal amount of strength. That means that something is going to happen in this particular sector. But HDFC Life is showing a lot of strength. I think it has absorbed its important level. So the next level to watch out for would be 900 or 950 in next few weeks or months. It will take time. But at this level also, it's a buy with a stop loss close to 700 on a closing basis. The other stock on which we are bullish is Tata Technologies. Based on its technical formation, you can see the volume, the way it is gaining on a day-to-day basis. It is 10, 12 times higher than the average volumes that we saw in the past. So there also, I am of the view that it is the stock has started its pullback rally. It was around some 1400 levels after IPO. From there, all the way it fall to 900. Now it is into pullback mode. So maybe we could see the levels of 1200 or 1250. That's the overall view on Tata Technology. And finally, I would like to go with HCL Technologies. And there also, the stock has managed to surpass its previous high confidently. So the next level for HCL Technologies is between 2000, 2050, which is decent 15-20% higher based on technical formation. So here also we have a buy view with a stop loss close to 1650.
HCL Tech is now flattened out. It started trade with a gain of 1% on the back of the company extending partnership with Xerox. They've been in partnership with Xerox since 2009, and now they've extended it to continue to help Xerox with their digital transformation. But the stock has given up gains as the day has progressed. Shrikant, thank you for joining in. Get into a break. Up next, we'll get you an exclusive conversation that we had with Girija Subramaniam, Chairman and MD of New India Assurance. Stay tuned. Welcome back. Now, despite strong growth witnessed by general insurance industry, New India Assurance is one company which has largely missed that growth train. Speaking exclusively to CNBC-TV18, Girija Subramaniam, CMD at New India Assurance, spells out the reason for the underperformance and explains how the company plans to get back on its growth path.
We did a conscious effort in degrowing on bad business from the health sector. That's on the group health side. We did grew out of many group health accounts which were not doing well, and in that way I think we cleaned up quite a bit of health portfolio. Now, beginning this year, I think with this restructuring of the organization, having settled down, people getting used to this new way of working, we are now able to refocus our entire energy on growth with profitability, which was the agenda last year also. But this year possibly we'll be able to see more traction because our regional offices will be focusing more hard on retail business, going more aggressive across all lines of business. We will continue our work on group health business, wherein we are bleeding on certain accounts, and we will be pricing them better and trying to retain clients at the right price. Okay. So I think with these multi-pronged strategies, we would be able to show growth on a much better footing this year.
The industry is growing its total premium at about 15 to 18%. For you, it's been about 2 to 4% so far. Now that you're saying that the focus will come back on growing premium, what could be the right amount of growth that you could see in terms of the premium that New India could do for this year?
Actually, last year we started this process of degrowing on GMC. We gave up more than 900 crores of GMC business. This year, right from the beginning, I mean from more than 2 months now, we are focusing on increasing the premium for bad business. In the process, we are losing some accounts also because competition is there to pick up such accounts. But wherever we are able to hold on to the accounts, we are pricing them higher and taking on the business. So I can't say that at any point of time the entire bad business is done away with. There will be something because business renews at various points of time through the year. So the process is still on, the effort is still on, and I think it will be on throughout the year. As far as the premium growth is concerned, I agree that we were at 3 point something in the first quarter, and since now we are continuously motivating our retail offices and our agency and other marketing forces to go very strong on retail. We are increasing our product profile and concentration on retail lines. I think in the remaining 8 months of the year, we would be able to show more traction, and we could be showing somewhere, we hope to show a growth figure of around 12% this year.
On both health as total, retail and individual and group, and motor, TP and OD, what could be the growth in these two individual segments for the year?
Health and motor comprise 75% of our book, and therefore the growth will definitely be there. When I say 12%, we expect minimum 12% in these two lines. Otherwise, we won't be able to achieve that 12% on an overall basis. Correct. But then maybe that 12% will be more retail based than it was completely on the corporate base. Like in the health side, we have around 70% of our business coming from group health business. Only 30% is from retail. So maybe we will try to have a better balance over there. Maybe more tilted towards retail than towards group, and the growth coming out of that. Okay. So maybe that would be better management, and the profitability also is expected to go up once this balance tilts in favor of retail, and therefore the concerted effort towards this retail business. In motor, there has been a issue with regards to third-party premium not being increased for the last 2 years, and because of that, the business is becoming unsustainable.
By the end of FY25, by the end of current financial year, where do you see the combined ratio moving from the 160 at the end of Q1, and what is the larger target in terms of the next 2 to 3 years to bring down the combined ratio to?
Actually, quarter by quarter, the combined ratio keeps changing because a lot of businesses renew at various points during the year. Last year, we ended the financial year at 120.57. So this year, the first quarter has ended at 116, which is a little higher than what it was last year. So basically, as we go and with our increased focus on on improving the premium that we write on not so good business, and also increasing our the business that we write on the retail side, which is largely profitable, we aim to bring down the combined ratio significantly. And in the next year, possibly we are aiming at a combined ratio of sub 110%. Maybe 18-19% is what we would feel is possible, and which is ideal in this year.
That is in this year, FY25 itself. Okay. On the underwriting side, this particular quarter, your underwriting loss increased by about 10%. Motor also saw the underwriting loss increasing. Health also saw the underwriting loss increasing in the first quarter. If you could help us understand through the year FY25, how could the underwriting loss, move through the year at the end of FY25 over FY24? What kind of improvement do you see in underwriting loss, as in it reducing? By what extent do you see that happening?
Actually, when we are aiming for a combined ratio of coming down from 120 to 110, surely the underwriting loss would also expect it to come down every quarter.
Very interesting conversation there with New India Assurance, stock higher by over 3% today. But let's now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned. Welcome back to Mid-Cap Radar. Markets continue to hold quite steady with the mid-cap and broader cap indices doing very well. But one stock in focus, CDSL. The stock falls in trade after ICICI Securities downgrades the stock to a reduced weighting from hold. Vamakshi joins in with more details.
Well, absolutely, Vivek. CDSL down and out in trade today after the downgrade that came in from ICICI Securities. They've downgraded the stock to reduce from hold. However, they've increased the target price to 1,320 per share. They say that the company is an attractive play in the bull market, as seen in the past trends, that is between FY20 to 22. But the upcycle multiples that are seen now are not looking sustainable in the consolidation period. They believe that the company is now trading at 59 times 1 year forward core EPS and 53 times 1 year forward EPS on FY26 basis, and this is double as compared to what the company has traded in the past. The price cuts that were seen as on the first quarter indicate there is that the company is possibly passing its operating leverage to the customers, and this in turn limits the upside as far as margins is concerned. The possibility of increase in cash volumes, mainly on account of restriction in options, is more likely in the intraday market as compared to the delivery. So therefore CDSL, which benefits only on more volumes in delivery segment, it would not be beneficial for this company. Delivery as a percentage of total cash trades has also been trending downwards from 26% in FY18 to 21% in FY24. They also highlight that the risk reward in the company is not looking quite favorable, with peak cycle multiples as well as possibility of lower than expected earnings growth on a high base. So overall, it's a downgrade coming in from ICICI Securities on CDSL, and as a result, the stock is declining in the trading session today.
Thank you very much for that, but it's up 23% in the last 1 month. Datamatics is on fire today. This is after the company has partnered with Microsoft, where they will be building custom AI solutions using Microsoft's Copilot for Datamatics customers. So this is an enhanced offering that Datamatics will be able to give its enterprises. This will be custom built, so depending, they will tweak it based on the requirements of each of their clients. So the street is clearly excited. The stock is up 20%. But we'll have to wait by to see the impact, the financial impact of this particular development. But it's a small company which ties up with a very large company like Microsoft, so the street is excited. And also bear in mind that Q1 numbers were very muted for the company. So the company's revenues had declined quarter on quarter, and on a year-on-year basis, revenues were flat. And the company said it was slowness in US and European client, and they'd seen flat business, flat growth in their existing business. So, the street will want to see a pickup in their base business also, and then the upside from this Microsoft partnership.
Well, absolutely right. Very, thank you so much for, highlighting that. The entire mid-cap basket, right? If you're talking about the IT space, look at names like Persistent, Tata Elxsi, especially if you see 1 week, last 15, 20 days, these stocks have done really, really well. But another sector of the market that we are focusing on is actually the power space. Have a look at a name like NLC India. NLC India, today there was a note coming in from Elara Securities. They've initiated coverage on the stock. They see almost a 30% upside. Remember, the company largely in the regulated equity business, so their returns are regulated. But despite that, given that the company has gone ahead and guided for significant capacity addition, Elara feels that there is significant upside in from current levels. Even a name like IEX, this particular stock too has done very, very well. Despite the overall off-market coupling, the company has seen strong volume growth, in the almost 8 to 10 quarters as far as the short-term market is concerned. So that's another stock that continues to do quite well in the last few trading sessions. But that's all the time we have on this edition of Mid Cap Radar Mutual Fund Corner. When we return.